Welcome to another episode of the Mike and Matt Show with myself, Matt Weber, and my partner and co-host, Michael Strassen. This podcast is designed to help provide insight into the world of real estate investing, entrepreneurship, personal development, and business. Please subscribe, follow, and like the Mike and Matt Show on all podcast platforms. You can listen and watch the show on our YouTube channel, Alpha Funding. Be ready to level up your life and be inspired by some of the most successful investors and business professionals in the game. You'll laugh, you'll learn, you might cry. We hope you enjoy the show. Welcome back to another episode of the Mike and Matt Show. On this episode, we have a amazing guest, John Palumbo of Movement Mortgage, a friend of mine. I'm very honored to be able to call you a friend. Michael, I want to welcome my co-host. How are you, sir?
I am fantastic, man. How are you today?
I'm doing fantastic because this is a long time coming. I've been in the real estate industry for 8 years now, and I get to have somebody that I have known, somebody that I've been able to be a part of in the real estate industry for 8 years, finally come on the show. John, I actually have a lot of personal connections with you. You were the one who helped me out with my first real estate investment property.
That's right.
So thankful for you. Welcome to the show.
Thank you. Great to be here, guys. Thank you.
Thanks for coming.
So I'm going to just jump right into it because I know
this hour
is going to fly right by.
It's going to fly by. You take it away.
So I want to know, in your own words, who is John Palumbo?
All right, so who is John Palumbo? So father of 3 boys. You've met the boys. They're rambunctious kids. Married for 12 years now to my beautiful wife, Diana. I'm a real estate investor. I started right out of school. I graduated in 2002. I started in the mortgage business back in 2003. So I'm a mortgage banker, a real estate investor, and I've done a lot over the last 20 or so years in this business.
Yeah, you're also an RU grad, Rutgers University.
Rutgers University, yep.
I saw that. Yeah. It looks like you went to school for, your major was communication, poli-science, nursing. Nursing?
Yeah. So it's so interesting. Like when I first started in the business, it was great. Business was booming back then, and then the market crashed, right? So I said, I don't know if this mortgage thing is going to really work out for me because, I was still young. I had a whole future ahead of me. So I went back to school. I had my first degree was my political science degree, and I was going to be an attorney, and everyone said, don't do it. It's like the worst thing in the world. Every attorney I spoke to hated it. I don't know why, but everyone talked me out of being an attorney. So I put that to the side. And I picked up a second degree as a communication major, and then I went back when the market crashed. I was working full-time doing mortgages, and at night, weekends, I was taking care of patients. So I was in the hospital, and I've always loved the sciences, and I got through. I graduated with high honors, but I've never did anything with it. So here I am still doing mortgages, 20 years later. But it was great. I mean, I learned so much doing that, and my wife and I at the time went together. We both went. She got her degree in nursing, I got mine, and I was going to go into the anesthesiology route, but I couldn't leave the mortgage business. It was too good.
You made the right choice. Listen,
yeah.
I'm the child of a judge. My 2 brothers are lawyers. I graduated Rutgers as well.
Yeah.
And right after, my brother goes to me. He's like, so what are you going to do? I was like, I'm going to go to law school. He's like, no, you're not. I'm like, what do you mean I'm not going? He's like, you're not going to law school. I'm like, why am I not going? He's going to hate your life. You're going to hate every part of your life.
Yeah.
And you're going to have so much debt. And you're going to hate every part of your life.
That's what scared me. There's some attorneys I'm sure that love what they do and they're great at it and
they have a lot of debt.
Yeah, but everyone was like, don't do it. I said, okay, fine. So I went into mortgages. My mom was a real estate agent, so she said, why don't you try this mortgage thing out? So that's what I did. She threw me a couple deals to get started, and the rest is history for me.
Well, that was going to be my question. You come out of college, poli-sci, communications, you're like, I want to do mortgages. Yeah. Like, how does that? So it was your mom? It was basically like, why don't you try this?
So we had a good friend in the business at the time who owned his own mortgage company. And I was selling, I had just gotten out of school and I got a pretty good job in sales doing, we were selling like office ergonomic equipment. So like chairs and glare filters and, we were fixing desks and things of that nature. It was sales. So I walk in and he goes, listen, my mom said, go meet this guy. He has a mortgage company. He'll buy whatever you want. I said, okay. So I go over there. He says, listen, I'll buy whatever you want me to buy. But he says, can you just come work for me? He says, he gave me an offer I couldn't refuse. And I said, you know what? I have nothing to lose here. Let me just jump in. And that's what I did. And I started, I was real young. I was just out of school and I just learned, like I was just surrounded by people who had been doing it for a while. And I was like a sponge. I just learned and learned and learned. And back then business was booming. It was mortgages. We were giving mortgages away, no documentation, no credit, no this, no that. It was a very, very different time. So that's what got me started into the business. My mom was a realtor. I kind of grew up in that business, just watching her, and I said, you know what, let me give it a try.
I mean, I love that story. I mean, that's the story of most people in real estate. Like,
yeah.
Look at Matt. I'm going to use Matt here as a specimen. What did you do before Alpha?
I was a personal trainer, and coincidentally, I was also a science major. Nice. I had a biology degree, exercise science, and I ended up not using it. And while I was personal training, I ran into somebody who knew David Hansel, my partner, and the rest is history.
Yeah. I mean, look, I went to school for history. Actually, not just any history. I was a classics major, so I was a real nerd.
Wow.
And then I went to grad school to be in film. I went and worked for SiriusXM. I ended up working for David Hansel just because I'd known him since I was 14. I never done anything in remotely close to what we do now. And I did work at a law firm, but not as a lawyer. So I did do that as well. But it's just, we talk about it so many different times on our different episodes with different entrepreneurs. Real estate's the equalizer.
Yep.
Like the barrier to entry in real estate it's zero. Do you need a college degree to invest in real estate?
Yeah, no. Not at all.
Do you need a high school diploma to invest in real estate? No.
Nope.
Like, you don't need to have done it before. You don't need an economics degree. You don't need real estate is the largest even playing field for anybody to become wealthy, to start a business, to do, to be their own boss, to do all of these different things. The three of us sitting here is literally that.
Yeah, and now they do have real estate courses in the school, and there is degrees. I hear that, towards in real estate, which we never had those opportunities, growing up. But I always tell people, like, when my kids go to school, I hope they go into something that's specialized, because if you're just going to go to just rack up crazy amount of debt and not do something specialized, what's the point? I mean, sure, it'll teach you how to be well-rounded and how to, be responsible and, things of that nature. But I really feel like for the amount of money you have to spend to go to college, like, go do something specialized, because that would be, the way to go about it, for 100%. Sure. Yeah.
You were talking about your son when we were together the other night at a networking event, and you were saying how your son is like some wizard.
Oh my God, yeah. My son Luca is just a brilliant kid. He's the math guy in the family. Everything is. I mean, he'll look at a room and he'll basically measure it out and do all sorts of fractions and I mean, I've never seen such a young mind like him be so advanced. My handyman Darren was at my house the other day, who's a very close friend who does all my work, and he says, John, the stuff that your son is doing on the computer, he's writing code. I learned that in college. No one taught him. He's building video games. He's just super, super smart. I hope one of my kids eventually goes into real estate. I think he might be the one, because he's got the he loves the math. There's a lot of math involved in what we do, but who knows? But yeah, he's a really, really smart kid.
So along with you being in the mortgage industry, you've been very successful. Just to I'm going to pat you on the back and give you some props. You're in the top 1% in the country as a top producer. You've been a branch manager at multiple mortgage companies. You're now currently the sales manager at Movement Mortgage. You've had tons of successes, and I'm sure you have many stories to tell of success. Along the way, I'm sure you faced some adversity. If you could what would be one of the bigger challenges that you face? And I think you already touched on it, but what would be like a big story of adversity that you face?
Yeah, so I mean, again, in this business, it cycles. Like, we all know the cycles of how real estate goes up, it goes down, and for overall over the years, I could say that my business has continuously gone up. But then you had those few years where the market crashed back when, I went back to school because I wasn't sure what was going to happen in the future. These last few years have been probably I think these past couple of years have been worse than when the market crashed back then. When the market crashed back then, it was because a lot of people were defaulting and we were just selling mortgages irresponsibly, I think, Also, there was no checks and balances. You didn't even have to be licensed to do what we do. You could have a criminal record and sell a mortgage. There was no checks and balances. They ended up finally coming up with licensing and education, and you have to pass tests. This completely cleaned up the industry. So I got through that time. I went back to school just as a backup plan, but I ended up getting through because it was hard. It was really hard. And then these past few years, it wasn't as bad for me because I expect it. I expect the cycles of the market to start to come down. So I've always been smart in preparing for it. But if you're going to compare, like, you know, overall in the course of my over 20 years in this business, the last couple of years have been tough because all we do is we're pre-qualifying borrowers, we're helping buyers, but there's no property out there. There's, you know, they're not qualifying because rates are so high. So again, a lot of people are seeing it again. People are leaving the business. And to me, I actually like this market. I like it because I know it's going to pass. And I try to teach my guys and say, hey, look, get through this, you'll get through anything. You know, any real estate agent that's coming in and starting in the business now, if they work hard enough, they can get through this time, they're going to be fine years down the road for sure. So, you know, these have been the tough years, but overall, you know, the business has been good. And if you just prepare right for it, you're going to get through like anything else that we've gone through. And
you haven't had maybe incremental growth these last couple of years, but because you've been in the business for so long, you've done things the right way, you've built amazing relationships, which I'm going to touch on in a second. You've been able to maintain your business. You might have just not have been growing these last couple of years.
Yeah, the beauty of it is that I built such a vast network of people and referral sources that my phone won't stop ringing. Right, it's always going to keep going. Thank God it rings, and you know. But I'm still out there. I'm still out there hustling. I'm still grinding. I'm still going to events. I don't stop. I've never stopped doing that. It's very easy in our business, and I see it all the time, to just kind of get lazy. You know, when the phone's not ringing, well, do something about it. You know, it's not going to ring on its own. You have to go out there and work. And when you're self-employed and you're not clocking in and out, it's very simple just to say, you know what, I'm just going to take it off. I'm just going to take a day off today, you know. And, you know, I've never done that. I've just continuously just gone right through it. But yeah, I mean, it's interesting to see where things are going to go this year. I think it's going to take some time before you're going to see a turn in this market. But overall, we've been steady. My office has been, we're one of the top producing offices at Movement for my division. And we're still going strong, but we work hard every single day.
And what you're also saying is you're getting yourself out there. You're also a family man. You said you have 3 boys.
Yeah.
So the fact that you continuously get out there every single week, and if you're a listener, if you're in the New Jersey, New York, Pennsylvania, the metropolitan area, you will see John at events every single night of the week. You'll see him at events on the weekends. You'll see him constantly speaking at expos. He's constantly always giving value, educating. He's a great leader. He's a leader on his team at Movement Mortgage. He's a leader in the space. So actually, that's how we met originally. So Mike and I both share the same story. I'm not sure about you, but that's how we got into the business. Was David Hansel, our partner, had made us come to this event in New Jersey, which is very popular, John Steingraber's group called New Jersey Real Estate Social Network.
Yep.
And that was the first time I met you.
That's where we met, yeah.
And I mean, how many events have
hundreds. I mean, we've been, and you
as
well. You're all over the place. I mean, it's always, you know, alphas everywhere. I think that, so I built my business off of from events, from the personal networking. I'm still the guy that sees customers in person. Like many times, people think I'm nuts that I actually have people come to my office. I sit with them, spend an hour, 2 hours with them, whatever it is, and put together a pre-approval for them. It's very different the way people do business today. Everything's on social media. I'm not even very big on social media. I have to probably hire someone to help me with that. But I think when you can meet someone in person, like I've done, and you can get in front of an audience, and it's not easy, right? It's not easy. I've taught a lot of my guys, the ones that were the most afraid to go on stage, I would just throw them up there and say, just get up there, and they just had no choice. And today they'll say, you know, thanks for doing that because it's changed my life. You know, when you can get in front of people and you can provide a value, okay, you can show that, hey, I really know my stuff, but how can I help you? How can I help you grow your business? In turn, the business will come back to you, right? With those relationships that I've built over the years, and sometimes it takes, you know, years for me to be able to, you know, gain someone's trust, right? People do business with people that they like to be around, that they trust, and that takes time. And with time, you know, again, the events that I've done, the education I've given, the speaking that I do, that's what's gotten my business to the next level, you know. And I never say no. You know, Nick calls, John calls, anyone calls us, we're out there. Like, we are out there, and because we're reliable, they know they can rely on us. We know what we're doing, and I love it. I mean, I actually enjoy it.
I know, and you do, because you speak what you say.
Yeah.
I mean, you practice what you preach, and you're right though. When I got my pre-approval with you, I went to your office. We sat down. There was something that I'm not very comfortable doing. It was something I had no idea what I was doing at the time. And I sat down with you. You took care of everything. And I also want to pull that and draw a parallel with what we do at Alpha. And it's the power of getting the pre-qualification to getting pre-approved with us on the hard money side. There's just a comfort level when you do sit down with somebody, you go through all their information, it just gives you that confidence that when you go out, you're making offers, you're like, I feel like I know that as soon as I got pre-qualified with you, as soon as I wanted to make an offer, I felt great about it.
Yeah.
And I think it's the same thing on the hard money side.
Absolutely. It's about trust. You said the word, it's trust, right? When people, no matter what kind of lending we're doing investor loans, we're doing construction loans, people really have to trust us, right? Like,
Yeah.
but even with you, like, I would imagine more traditional, conventional mortgages, some of these people, like, this is a huge decision in their life. They're going to buy a house. Yeah. They're going to upgrade their house. They're finally going to buy that house they've always wanted. There has to be an immense amount of trust that they have to have in whoever is going to help them through that, because, anything that goes wrong right there could derail something they've wanted for their entire life. Like, I think people in our business, there's a lot of chasing this, that, or the other thing. Who's the best of this and who's going to give me that and all those other things. But nobody chases the trust as much as they should, right? Because, there's a lot of promises that go out. A lot of people say a lot of different things, and I'm sure, that's our business every day, is everybody saying this. And I'm sure for you too. Right now, business, like you were just saying, it's not the best out there, right? Yeah. So I'm sure there's a lot of other groups that are trying to say everything they possibly can to get people through the door, but it's the trust. It's that one-on-one that you're doing. It's that building of it. And to go a step further on that is also that I'm not going to be the guy that's going to tell you what you want to hear. I'm going to tell you the truth, right? And I'll lose clients because of that, because the next person said, what I know is incorrect and what I know is not. They're gonna bait them in, and then they're gonna switch it at the end on them. And I don't work that way, because the moment you tarnish your reputation, that's when you it's gonna affect your entire business. And it's so important to me that I'd rather lose that client, but I'd rather be upfront and honest and say, look, this is what you're gonna be qualified for. These are the programs for you. These are gonna be the challenges that we're gonna be dealing with. And I hope that they trust me in that. And usually they do, because they're referred by somebody that come very highly recommended. And if they don't, they don't. And I have to just move on. But I'm not going to bring them in. I'm not going to string them along and then change things on them and then, burn that bridge. I'm not going to do it. That's impressive in this market, though, right? Because when we're saying that volumes are down and all that,
people are desperate. Yeah,
it's impressive to say, listen, I'm not going to take a deal just to take a deal. That's been Alpha's mantra since the beginning. Yeah. I used to have the nickname. They used to call me Dr. No in the office, right? Because I'd be the one to be like, no, we're not doing this. You're not doing this.
Did you ease up a little bit?
I got a new job. That's really what happened in the end. I stopped being the guy on the phone. So, yeah. But the truth is, that's what we've always done. Like, we turn borrowers away often because we're like, you're going to make no money. I'm going to make money.
You're looking out for their best interest. Yeah.
And then they hang up on me and they're like, I'm going to go call the next guy. And they call the next guy and they go do that deal. And, nothing was what it was. And then they call me up on the next one and they're like, so I'm not going to tell you were right, but you were right.
Yeah.
Can we do business again? And it's like, sure. It's like, I never want people to go through that harsh reality of it, but that's part of the trust building, right? Is like, I never, just like you, I never want to do a deal just to do a deal. Yeah. There's nothing good comes from it.
And I'll even sometimes, and I'll ask them, I'll say, look, I'm talking to you as a friend here. Do you truly, because, on paper, I can approve someone based on what their income is. But once I start to really learn their lifestyle and what they do, where they're spending their money, I'll ask, I say, look, if your tenant stops paying your rent one day, are you going to be okay? Because I truly am concerned about that. I don't want them to go into this and I can get a deal done and get them into a house, and then they're living paycheck to paycheck, because I see their spending habits. I understand their finances very, very well. I dig deep into that. And I ask them, I say to them, I'm speaking to you as a friend. Are you comfortable? Are you good? Because yes, I can get this done, but I want to make sure you're good at the end of the day. And that means a lot to them. That does mean a lot to them, because we have to look out for their best interest.
And the one thing I would say is a testament to you is the fact that, like we were just talking about how many events you go out to. If he did not have a good reputation, I'm sure he would not be putting himself out there month after month, year after year. And also, what I want to talk about is, what are some of the things that you've done over these last 20 years for you to continue to be successful? You've talked about going out to events, your relationships, but I feel like there's always a secret sauce, and I'm always curious to know, when you study successful people, what are the things that real pros do that typically most of the amateurs that wish they could be pros or just amateurs and they're never going to be at that level that they don't do? What would you say from a self-reflection? What are some things that you've done that has made you so successful over the years?
So first of all, it's I would say mindset is very important, right? When you wake up in the morning, you're going to say, hey, what am I going to accomplish today? What are my goals, right? Just like going to the gym. Just getting to the gym is the first step, and then staying on a schedule or a diet of some sort, right? It's all about the discipline. But I've always been very, very disciplined in anything that I've done. But I've also surrounded myself around successful, positive people. Because when you're around negativity all the time and everyone's complaining, oh, that person's just lucky, or no, people do work hard to get where they are. Not everyone's born rich, or not everyone is given what they've, what they have. And I've always tried to surround myself around positive people. And I quickly learned at a young age that all these people that were successful all had one thing in common. That was real estate, right? They were either business owners, successful business owners, or they were involved in some kind of real estate. So that quickly got me to learn about the business. With that, also with this business, what I've learned is that there's too many salespeople out there that don't even know their own products. They don't understand the mortgage business very well. They don't take the time. Just before I came here, I did a training at Keller Williams, and I'm teaching them all sorts of things about non-traditional mortgages. And I'm saying, the reason why I do these, I do them every other week with them, is it's so important to know what's out there. And I tell you this because I take so many deals from other banks, and I took one the other day, it was denied by 2 different lenders. In a day I had it approved. And it's not because they don't have the products. Some don't, but usually they do. It's just that they don't know. They're not educating themselves. They're not keeping up with all the different programs that are coming out on a constant basis. We're always looking for the next best thing that's out there. How can I help get this tough deal done? And the way I built my business was dealing with the hardest transactions. Like, I was the guy that would take the toughest deals that no one would touch, okay? And somehow, some way, I would always get them done. And then I became like, I got the reputation of, hey, just go to John. If he can't do it, no one's gonna do it, right? and sometimes like, why, I get this like sticker on my head, like go to John for, it was just, they're hard deals, but I love doing it, and I loved learning and getting them done, because the people, at the end of the day, when you see them close, they're super happy. They invite me to their homes. I get to know their families, because no one can get that done. I built my business over that, taking on these tough deals over the years. And even the small little loans, right, that no one wants to touch because the loans are too small, and you're almost losing money doing it. I don't care. I never look at money. I never look at dollar signs on a deal. My thing is getting these people into a home, making sure that it works. If it doesn't, we don't drag them through this whole process. So that's worked out very, very well for me over the years, in terms of just being able to get those deals done that no one else can really do, and just continuously staying on top of all the new programs, all the new guidelines. The trust we talked about, that's super important. Being around positive people is very, very important, and always just being honest. That's really what's worked.
Well, I think when you think about it, right, it's also that knowledge comes with time, right?
Yeah.
Like, I think, when people are they're always looking, you're saying, they're always looking for the next best thing, right? And it's, a lot of that comes with time. You've been doing this 20 years, right? And with that time comes, you don't get to know all your products overnight. You don't get to know, hey, this will work here, or do this thing. It's experience, it's time, it's building all those things. That's part of the trust, right? Like, why should you trust, why should we trust John? It's because, well, I've been doing it for 20 years. Not just doing it for 20 years. Like, when things were bad, I was doing it. When things are good, I'm doing it. Things are bad, not bad, but things are not great right now, I'm still doing it, right? And then, how many people, even in your own office, how many new mortgage guys pop up and they're like, I'm gonna make some money. I'm gonna go do this. I'm gonna do that. And it's like, you got to spend the time. You got to put that effort goes in everything you do. Putting the time, and you were talking about how people get wealthy. It was real estate and time, right? Because they put the effort in, they put the work in. And I think that's what it is too. And it's like, I look at our own business, right? Like, hard money lenders pop up like weeds. Next week there's going to be 15 more of them. 10 of them are going to die. The week after that, there's going to be 20 of them. Then 25 of them are going to die. But that's just what happens. But I look at us and I say, we've been at this for nearly 17 years. The company's been at this nearly 17. I've been in it for 10. And you got to go, if I'm telling you no, it's because I kind of know something. Like, I know what's going on, and somebody else might tell you yes, but that doesn't mean you should do it, right? And then even for you, it's like everyone else is telling you no, but John's telling you yes. Well, he's been doing this for 20 years, right? He's not just telling you yes because he wants the deal. He's telling you yes because I have 20 years. I've seen your scenario, 55 times before. And you're going to be the 56th loan I'm going to close on doing this exact thing. And I think that's really important. I think, in the way business is today and how things are moving so fast. You're talking about social media, internet, all these other things. We stop relying on the credibility and the effort, right? Like you stop saying like, it used to be a big deal in marketing where it's like, established, 1860. And you'd be like in your head, you're like, oh my God, this has been around for 150 years, 200 years. And that's kind of lost its thing, and it shouldn't, because experience and time, not in everything. There's always going to be something new that's a thing, but all those things mature over time and they get better and better and better. And so do we get better, and so do our businesses get better. Like you would have to admit, there's probably so many programs that people don't even know about. Going to a mortgage company like yours, in their mind, they're like, I'm going to get a conventional loan, I'm going to get an FHA loan, and I'm going to put this much down and that much down. And that's the only hope I have in my life to get a deal done.
That's all I thought.
Right? But they're saying that, and you're like, should I show you the list of programs we can put you in? And that just comes with the time, and that comes with saying, hey, I'm going to go here because they have the pedigree, they have the experience, they have all the pieces. And I wish people looked at that a little more when they make their decision. Like, a sidebar, to this is like, you have companies like Patagonia, right, who've been around and for a long time, and they charge a lot of money for their stuff, and they're like, well, because we know what it takes to make it, and we make it the best, so it costs money, right? So you have to be, in our business, I always tell people, like, be careful how much you're chasing rates, or you're chasing
right.
whatever it is you're chasing. You have to say to yourself, I need the best thing, because you might chase a low rate, but you're going to get screwed over somewhere else in your deal, right?
Yeah, I see this all the time, and I love that you bring up that point, because, and I don't lose many deals to rate, and if someone shops the entire country, they're going to find something better somewhere, right? It's just always that way, but the fact that, again, that trust is already built. I sat with them. I've gone through the process. I've educated them. They don't even look at rates anymore. They know I have their best interests at heart. They know they're going to get the best that I can possibly give them. And that's why that face-to-face makes such a difference. But you're right. It's unfortunate that sometimes these buyers, they don't understand what they're getting themselves into. Mortgage people right now are in desperation for a lot of banks. They're just trying to get a deal done. And I feel for them. I really do. I know what they're trying to do. They're trying to make a living. But not at the expense of the customer. You just can't do that. But I see it all the time.
What if I told you could invest in real estate with none of your own money? There's no catch here, just a simple, proven system of combining two very reputable companies and tools that include hard and private money and unsecured business lines of credit to cover all of your costs, from the purchase, the rehab, down payment, closing costs, all the way to interest payments and working capital for your construction project before draw reimbursements. To find out more, check out MB Alpha at dealswithnomoney.com to watch your training video that explains how this program works. Don't let money be a barrier for you to invest in real estate. Get started with MB Alpha. John, I want to touch on, because you were talking about how a lot of, when you surround yourself with the right people, you talked about that. You were also talking about how you've seen that most of them have either made money because they've owned a business or they've invested in real estate, and you've drawn that. You are an investor in real estate yourself. So you're not just a mortgage professional. You are a real estate investor. When did you actually invest in your first real estate investment project?
Yeah, so part of that, we're talking about success and all, and one of the things that is really important is taking risk, right? Because part of that is going out and getting out of your comfort zone and saying, hey, let me go and do this. Because if someone else can, get wealthy doing this, why can't I? I saw so many people just helping them with loans. And my mom says it all the time. She's a realtor. She says, I've made so many people rich getting them these houses, So I was just fresh out of college. I had just started, and it was very easy though back then to get financing, but I saved up enough money. I was a bartender for a long time. I worked 10 years bartending, even through college. and I saved up whatever money I could. And I bought my first 2-family house. I bought it for $416,000. I was just a kid, and I house hacked it. It was fantastic. I lived downstairs, and I rented out the entire thing. I had a hot tub in the garage, a palm tree, and it was just the best. It was the best. It was. I had so much fun. That same year, I bought my second 2-family house for $480,000 in Totowa. Same thing. I moved. I house hacked that one. I lived downstairs. Nice pimp apartment. It was fantastic. And I basically rented out the whole house, lived there for free, and then I just kept building from there. But that was a big risk. I was just a kid. I really didn't have much money.
It's got to be scary. Like like you said, when you ask people, you say, what will you do if someone's not going to be able to pay for their rent?
Exactly. So I knew going in what I was dealing with. I've never had one vacancy, not one vacancy to this day. I've owned those homes over almost 18, 19 years. I've never had a vacancy, and it was the best thing I've ever did. And then from there, once you start to buy, you understand how it goes. You just keep buying, right? So I'm very well in tuned with the investor world, because I'm also an investor. I understand the language of investors. I understand the kind of financing that they need, and that's also what differentiated me in my business, is that I had that niche. I had that niche of being an investor, understanding the investor world, and then I started to specialize in renovation lending. That was a big thing that I was doing, as a young kid, because no one wanted to touch renovation loans. I said, perfect, let me go in and dive deep in renovation loans. But yeah, I started as a young person. I was, it was a scary time. And then what I did for my second house, I raised capital. I was just a kid again, and I knew nothing about raising money. Now we go to all these events, and people speak about raising capital. We were trained on it. I was raising money, asking my friends to let me borrow some money, paying them back with interest when I was just a kid, not even knowing anything about it. So that was pretty cool, how I had gotten started. I still own those homes today. My house is paid off. My other one's almost paid off. I own a bunch of others. So I'm, to me, it's the best thing I ever did at a young age. And it's never too late for anyone to start, because they'll say, I'm going to wait for what? If you find a good deal, buy it. Don't worry about the rates. Mm-hmm. The rates are going to come down.
Buy the home, date the rate.
Yeah, I mean, I see this all the time. So you got yourself a good deal. The market values are going to keep going up. Rents are going to keep going up. Forget the rate. Maybe you're paying a little overpriced right now. So what? Mm-hmm. You're going to be okay down the road.
On your side, and without us getting into a little bit of an arm wrestle or a little boxing match, because on the residential side, hard money. For that. You're not ready for that?
I'm not prepared for that at all.
So hard money lenders. I think so many people think that hard money lenders and traditional lenders, that they're like they're competing, industries, and they're not. We complement each other.
We do. We work together.
So from the renovation loan perspective, could you educate, as you always do, our audience on some of the non-hard money products? If you were to buy an investment property, or if you're just, maybe it's your own home, some of the renovation products that are out there, maybe most people don't realize.
Yeah, sure. So there's, and a lot of times they automatically would try to go to hard money or private money, but there are traditional mortgages out there that are very cheap. They're more work involved. They're full documentation type loans that are out there, but you have your 203Ks, which is an FHA loan, really popular mostly for your first time buyers looking to just buy a home that needs either a small renovation or a massive renovation. Okay, just redoing the entire house. Okay, that's an FHA loan. And then you have your Fannie Mae Home Style, which is a conventional version of that, which is also good for investors. A lot of investors don't know that they can get a traditional mortgage with 15% down is the minimum on that product. For single family homes, it doesn't work for multis. That's when you have to definitely go the hard money route. But these are really inexpensive, fantastic loans that are 30-year fixed loans. They're not short term. You don't need an exit strategy out of them. And we specialize in them. Like Movement has departments that only deal with renos. We have underwriters that just underwrite renovation loans. They're in-house products, so the reno begins immediately after closing. You know how the draw disbursements work on a schedule. Same type, very similar to like a hard money loan. But the difference is that they're permanent loans, they're a lot cheaper, and they're mostly for your primary buyers.
And so on the FHA 203K and for the home style, the renovation piece, when I buy the property, so I come to you guys, I get the mortgage, we close on it, I now have bought the home, the renovation piece is built into it.
Yes,
and
correct.
then when the work is complete, it then will just continue into that 30-year loan. It just, whether it's 29 years and a couple months or 29 years in general, it'll convert.
Just a 30-year. It's a 30-year loan. It's a straight loan from the very beginning. So it doesn't convert really. Just a straight loan. And the renovation phase begins right after you close. The money is dispersed out in phases until the project is completely done. Most people will eventually refinance out of it because now you have a bunch more equity in the home. So you could pull money out, or you can maybe, if you have mortgage insurance, or if the rates come down, most people will eventually refi, but you don't have to, which is nice. And
Are there prepayment penalties associated? No,
none at all. None at all. It's a fantastic product. It's a great alternative to hard money, but not always the best alternative. Hard money is great because you go in, you get it quick, it's easy,
speed,
and so I always say, look, do you have 45 days? Because if you don't, it's not going to work.
And then the documentation. Do you have the full doc? Do you have the income?
Exactly.
It's all about tools in your toolbox, right? Like, I've talked about it on the show. Matt and I talk to borrowers all the time. It's like, I'm never going to sit here and proselytize. Like, if you don't, every deal you do should be a hard money loan deal. You have to use the right tool for the right thing. You don't use a Phillips head screwdriver for a flathead screw. Like, it just doesn't make sense. You're going to work at it. It's never going to work. It's always about finding out how things complement each other, right? You're talking about the FHA and the home style, the conventional home style loan. Exactly. If you have time, why not use that product? If you have all the pieces, if you go full doc and you have great debt to income and you have all these pieces, like, you'd be crazy not to use the tools available. And it's always just about using, like, we are a tool in a toolbox. We're not the only tool. We are not a one size fits all. We're a hammer, a screwdriver, a power, like, that doesn't make any sense. And if we would, I think what we did would be really terrible because we'd never be good at anything, right? So you have to make sure you know about the tools in the tool chest. And this is just another one of them. So, that's why I don't see it as competition. I see it as like, hey, if you have time and you want to go save money, go do this. And people also, that goes back to trust, right? Right. Yeah. You talk about trust as saying, hey, I know when I don't have the best thing.
Oh, sure.
And I'm going to tell you how to go get the best thing. And the idea is that you might trust me in saying, hey, you didn't make me do the bad thing. So it's like, all right, let's go back to Mike, because now I need something in 2 weeks.
I had a guy call me this morning. He said, I need a loan in a week or 10 days. I said, I would love to help you, but here's Matt's number. I sent you a message.
Yes,
he's giving you a call. I said, I can't help you out. That's a hard money. You need to go to Matt. He'll take care of you. Again, and if it's something I can't do on my end, I'm going to direct them to the right person. Because somewhere out there in the industry, I'm going to know someone that has the product for you and will get it done. If it's not my specialty or I can't get it done quick enough, it's coming over to you guys or whomever can handle it.
We can't be jack of all trades, master of none. Like, what we do at Alpha, like, we specialize in certain things. We're great with infill ground up. We're great with single, 1 to 4 family fix and flips. You know what I'm not great at? Strip malls. Just not good at it. Yeah. I don't want to do it. Because I'm not good at it.
I got a mobile home park yesterday. Just had to pass it up.
It's not for us.
Yeah.
Nope.
But I'd be more than happy to point somebody to be like, here, go to this person, and they'll take care of it. Like, it's it's about, you have to help people find solutions and not just tell them no. And sometimes telling them no, it's like, yeah, I know you want to do it with me, but I'm not going to be the best person for you. All comes back to trust. But a question I wanted to ask you, because you were talking about, I kind of been perseverating on this for a bit. You were talking about, like, things are going to come back, and we've had realtors on, we've had investors on, we've had entrepreneurs on, and, we're into the second year of our show and, things have not come back so far. What does comeback look like? Right? Because, and I want to ask this question because I think everybody has a different idea. I think buyers have a different idea of what, things getting better looks like, and everybody has a different idea of what better than now is, right? From your perspective, you're still closing loans. You're still doing, making loans for people. What does the next thing, in your opinion, what does it look like? Prices are high. Are they going to stay high?
Yeah.
Inventory is low. Like, is it going to stay low? Like, what does the next phase of whatever we're in look like? Because even if rates come down, the Fed cuts the rates. That doesn't increase supply, right?
Yeah, it's and I often have this conversation with many buyers who say, I'm going to wait. I'm like, wait for what? You understand that when rates drop, millions of more buyers are going to flood this market, right? You're still going to have an inventory problem, which I've never seen it this bad with inventory. We have so many buyers, and I feel sorry almost for these buyers who have to move, who've outgrown their homes, who have no choice. Their landlord's selling or moving, and they have to make a move, and they're forced to deal with it. But it's going to take time. I think it's going to take years before the market does bounce back. Buyers who are waiting, I think it's a foolish thing to wait. If it's a good deal and you can afford it, and you make enough money to cover the payment, go for it, because spending money on rent is just throwing money away every single month. You're not building any equity, or not going to have anything to show for it down the road. But I think that what you're going to end up seeing is when rates drop, it's going to be a lot more buyers in the market. Hopefully, it will entice sellers to start to sell, because now they can get into another home. The biggest fear, the biggest conversation I have is always, if I sell my house, I have to go buy another house and spend 7%, 7.5% on a rate and pay top dollar. They don't want to do that. I think if at least rates are down into the 5s at some point, now they're like, okay, I can deal with this. I can sell my house, get really top dollar for it, and go take a loan out in the 5s. I think that would then entice a lot more sellers to start listing their homes and start to correct the market. But it's not going to happen quick. It's not going to happen quick. And I think those buyers that are waiting are just going to be off worse later if they continue to wait.
And I know locally in the New Jersey market, but even just in the Northeast, values are not going anywhere.
No.
So even if they do, let's just hypothetically, 2025 election passes, rates start to come down, inflation's hopefully gets under control a little bit, and we have all these buyers, like you said, just because the rates are in the 5s, you're going to have everyone's going to be like, all right, now it's the time to buy a house. And maybe there's some people that actually put their houses on the market because the rates are a little bit lower. It's a little bit more palatable. When if you do a zoom out over the last 30, 40 years, the rate is about as, the average of the last 40 years, which is around 7 to 8%. The values aren't going to go down. Maybe they'll hold firm for a little bit. Maybe they'll stay. But it just, like, I was looking at an article where they were looking at some of the data points across the country, and they were looking at the 10 top markets currently right now in the country, all the markets that are growing continuously right now. And they're growing pretty good. But even the 10 markets in the country that are not growing as fast as, or the 10 slowest markets in the country, they're still sub 1%. They're still positive. So it's like 0.01 to 1%. And actually, coincidentally, they're all in Florida, which is crazy.
Yeah, I was going to say, you must be talking about Florida.
This is so the 10 slowest markets right now in the country are still positive. Values are still increasing. They're increasing extremely slowly, but they're not going down. They're just going and growing at a very slow pace. But yeah, values are just going to continue to go up. It's a big mistake to sit and wait.
And I don't think you're ever going to see rates hit where they hit, because that was caused by a pandemic, which you probably will never see again. Rates in the 2s and 3s. It's unrealistic.
And it was artificially kind of created a little bit.
It was great while we had it, but it's never going to happen again, in my opinion.
So let me ask you a tough question then on that same point, right? Yeah. So prices aren't coming down. Yeah. Rates might, right? But that doesn't necessarily balance out for average, Joe and Jane home buyer wanting to buy their starter home, which used to cost $300,000, that now costs $600,000.
Right.
Do you see any new product coming out? Because FHA is there, but FHA doesn't necessarily help with affordability, right? Yeah, you can bring less money down, but if you have to buy more house, it's just more expensive. Do you think the government or anybody is going to come up with any new type of program to enhance affordability? Because you're just going to run out of houses. What's the average salary in America? It's still in the 70s, 60s, 70s. I don't even know the number, but I know we're not topping $80,000 a household to be average in America, right? So if you're talking about, you have people averaging $75,000 to, let's say, $80,000 a year, rates aren't going to do anything for them. So do you see anything new coming for those borrowers to get into homes?
So it's a great question. So, the majority of what we deal mostly with first-time buyers, right? And again, they're in this predicament, right? Rates are high, costs are high. Most buyers today are buying, there's 2, 3, 4 people on a transaction. So you're not seeing like one individual buying, you're seeing multiple people having to buy together, first of all, to be able to afford, okay? Also, you're seeing a whole slew of the non-traditional mortgages come out. The bank statement programs, the DSCRs, the asset depletions. These are all your non-traditional loans that are out there that made a huge comeback since rates shot up and prices went up, because a lot of people who used to qualify making $70,000, $80,000 no longer qualify. So now we have to look at alternative products, right? So there's a whole bunch. I actually just did a training this morning just on that, was on the non-traditional lending world, which is a lot of really unique programs. But one of the incentives that we have and we sell a ton of are the first time buyer programs, and they're great. In New Jersey, there's the NJHMFA, which we're affiliated with. We're giving up to $22,000 grant. So a lot of times when I have a buyer that's on the fence, I'm like, here's $22,000 of free money that you qualify for. And they become a lot more flexible, these programs, where before they had these really strict, income limitations or certain criteria. They've really relaxed those guidelines on these programs where most buyers qualify now. So we're giving up to $22,000 on one program. I have another program where we're giving an $8,000 grant, which is really nice. And they also offer below market interest rates, reduction in closing costs, a lot of benefits to almost incentivize these buyers. Say, hey, you know what, this is great. So this is a real big benefit to kind of offset this craziness that I'm dealing with these rates in this market. So it's a matter of really, putting buyers together. A lot of families are combining together to buy, living together. It's very common right now. And then just incentivizing them through a lot of the first time buyer products that we have. But they're really, really nice programs that people don't even know are out there.
And that's what you have today.
Yeah, we do mostly that.
Do you see anything coming down the pipe?
Anything new?
And different?
There's always new ones coming out, and we're always keeping an eye out for it. For example, Fannie Mae just announced last November that now we can do 5% down on multis. That was a huge change where it was 15 to 20% down on multifamily homes. We always had to go FHA. Now you can get a house with just 5% down. And get a grant on top of it. So, a lot of nice products. But yeah, there'll always be stuff coming out. There'll always be more things coming down the road.
So it's funny. You said, non-traditional products.
Yeah.
So in a market like this, which isn't going anywhere, because even rates are, like we were just saying, rates are going to come down. We have a supply problem. We have all these other pieces. When does non-traditional product become traditional product?
Well,
right? Like at what point does everybody say, hey, these are the products.
We're doing more of the non-traditional than we've ever done. That I could say because whether it be people buying under company names and their LLCs, again, that's more the investors that we're dealing with. But most of your self-employed borrowers are not qualifying at all. We have to go with their bank statements. We have to go with a DSCR type program because they just don't qualify.
Well, that was like what you were saying with the home affordability. That is just where things are right now, whether it's the income that people have, just things are more expensive, and then just homes, the sheer value of what you have to, the values of these homes, if you want to buy, they have to do something. It's kind of like almost when we were in our hard money, where we were at the top end of the market. This is like 2018, 2019, where to stay competitive with because there was such a flood of hard money lenders in the space, we were forced to be so sharp with our pencils. To fight for deals, we would have to do 100% financing, 10% down for a first-time investor. Never has done a deal before.
Yeah,
and we would have to fund 90 and 100.
We all learned our lessons.
Yeah. I mean, it's just where we are right now.
Have you stopped doing most of those types of programs now?
Yeah. COVID basically completely washed everything out.
Yeah.
I mean, COVID washed it out for multiple reasons, and we just, it's one of those moments where those things don't come back. You don't go back to those places. Like
correct.
They were there before COVID because people were riding a high, and now when you take a step back, you're like, oh, everything's got to be
back to normal,
nice and neat, or else you'll get caught up. And I still worry though. Like none of us here are economists. I'll be the first one I am not an economist at all.
He plays one on TV.
I guess so. But but I still worry. Like even with all these things, even with all the incentive programs, right?
Yeah.
Like wages aren't going up. So do you think that there's the possibility at some point in the next cycle, right? Because we're finishing this one and going into whatever's next, that there is some kind of major crash in the real estate side of it? Not necessarily in, I think whatever happens next, if it does happen, will look very different than 07, 08, because it won't be a across the board financial crisis, right? Because the banks they're making good loans right now. I wouldn't say they're making irresponsible loans. You're not making irresponsible loans.
No, absolutely
not. But is there a crisis of affordability that at some point catches up and just says, you just run out of people who can afford what's there?
So it's interesting that you bring that up because, and I don't think there's going to be a crash anytime soon whatsoever. People say, oh, it's going to crash. So I don't think there's one coming for a very long time if it ever comes. But what I'm seeing are people relocating. I'm seeing a lot of people leaving New Jersey and more expensive areas to live in, other states like New York, New York State, or I have a lot of clients moving into Michigan. I'm seeing and it's funny because I got part of the reason why I got my license in about 25 different states was for that reason. Because I have my clients are moving to the most random states just to be able to afford, and I think you're going to see more people that are, have the ability to afford living in this area are going to be still always be living here. But I feel like it's just pushing a lot of those other people out who just say, you know what, we live in, the taxes are crazy high in New Jersey. Nothing is getting cheaper. Insurance goes up every day. Everything is just so expensive. And, you wonder how people can actually even afford it in this area.
Well, that's why I say, does that hit a limit somewhere where it's just, you just can't, right? I look at that because wages are not going up in part. Like we look at the inflation problem right now, right? We have inflation problems because wages aren't going up.
Yeah.
Right. So, so you're running into all these problems, and I don't know if there's going to be a crash or a crisis. I can't tell because we are literally in uncharted waters. You go find the smartest Harvard economist and they'll be like, I don't know what's going on.
Yeah.
I've never been around through a global pandemic in a modern financial world like we live in right now. The last major global pandemic was in the 1900s. Mm-hmm. It was the Spanish flu, right? It was influenza. Like we didn't have modern financial markets like we have today. So you go find the smartest economist and they're like, I don't know what's going to happen next. I have no clue where we go from here.
It's a really tough one to predict.
But
it is.
But something, I do feel like something's got to give, right? Because that affordability, the problem is even if rates went back to 2%, it actually fixes nothing. Yeah. It fixes nothing because the houses are still unaffordable.
Insurance premiums have continued to go up. Taxes are going to continue to go up.
And because values have gone up. And taxes are up because values are up, right? Like, that 2% mortgage was great when I could buy my, 1,700 square foot, 2-bed, 3-bath, 3-bed, 2-bath starter home and pay $400,000 for it, or your duplex where you paid $480,000 for it. Your duplex is not worth $480,000.
It's probably worth double that, yeah. And and today too, I'll say, because I look at people's credit every day, I've never seen so much debt in my entire life on people's credits. So much debt. We have those borrowers who say, I have a 3% rate, okay, but you're paying 25% on almost $100,000 worth of credit cards. So when I look at it, and again, I'm a math guy, I look at numbers, right? I'm like, your blended rate is like 12%, or when you combine your mortgage of $200,000 and your $100,000 of credit cards, and they're so afraid to refi. But I'm like, even if I give you a rate at 7%, you're still saving a ton of money. I mean, I've never seen so much debt, and I try to explain to them, look, I understand that you're stuck on this 3% rate, but what you're missing is the bigger picture of how much money you're throwing away every month by not, refinancing. So that's another thing that I see a lot of, is people just accumulating a lot of debt. And that's, again, to live in these areas where it's so expensive, everything is so expensive, people are just getting used to living off credit cards. I see it every day.
What I think you said, which I think is a really interesting concept, I haven't thought about it. We obviously, during COVID, we went through the whole great migration where, a lot of people moved out of the New Yorks and the Californias of the world, and they went down to Florida, they went down to some warmer areas, cheaper areas. I'm wondering if that's what we see is over these next 10, 15, 20 years. Not everyone has always wanted to go to the metro area. They've always wanted to go to the cities where things are going on. But more and more, these, I guess you would call them secondary, tertiary markets, are now becoming primary markets across the country. Like I think of like the Pittsburghs of the world, the Oklahoma Cities of the world. There's so much development across this country. And maybe that's what's going to happen, is maybe you're going to see more people out of these big cities go into some of these other markets and kind of like, see people kind of migrate across the country to cheaper markets.
Yeah,
I don't know. I felt like that was more of a thing early in the pandemic because that work from home was really there, and you're kind of seeing a reversal on that kind of across the board.
What if people just can't afford to live in New Jersey? What if people just can't live in California?
That's the crisis, right? Like that's what I'm saying.
What if they go to a Michigan, like he was talking about, or if they go to an Indiana?
But they have to have jobs there too, right? Like you have to, if you can't afford to live in New Jersey or New York City, you have to be able to get your New York City job to let you go to Michigan, or you have to go to Michigan and find a job over there. Like this is the push and pull I'm saying. Like, I don't disagree with you. People have to go where they can afford, but at some point, like the levers that you pull to make that work, something breaks because you have to go, okay, like, I can't afford to live here because this is it, but my skills only bring me to this point to make this much to doing this thing. Yeah. That's where I see that the friction coming, right? Whereas that's to me the crisis is like you're just going to run out of people who can truthfully in an ever appreciating market, you'll run out of people who can truly afford to buy if wages don't go with it. And so we're kind of stuck in that place.
So now, with that being said, do you see, because obviously you're a big fan and for many reasons, you own real estate, you help people buy real estate. Do you see the rental market? Do you see people, our nation becoming more of a rental nation where people rent instead of own?
You know, in a lot of cases, yeah. I mean, the rental market is so strong. People are fighting over apartments. It's hard to even find an apartment, and they're paying top dollar. So that's a really good point as well. I feel that a lot of people are just going to have to go that route for some time.
You have to live. You have to
live.
go somewhere.
Yeah, for sure.
You don't own, and you always talk about pros and cons.
Yeah.
You're not paying taxes.
But even that has an end moment, right? Because you can only increase rents to a certain point too. Like that's where I think like the dance will stop at some point, where you can't be ever increasing on everything, but not in a place where people can afford to pay the money.
Right.
You know, and I that's the kind of the question is that I don't know when that happens. I don't know what the inflection point is, you know, and that could, you know, 100 different things could have, but that to me is the thing where we hit that inflection point. I think though, the one thing we're all saying to each other is invest in real estate because there's not enough of it. There's not enough for people to buy.
Well, just look at, I think this might have been one of our first episodes, or maybe I never said it before, but if you look at inflation and then you look at how homes have appreciated over the last 30 years, if you do not jump on this wave, you're going to miss it. And it's going to be a very painful, time for you because inflation is not stopping. Home values are not going to stop.
But you still need to add to your graph now. You have to add wages. So if inflation is like that and values are like this and wages are like that, that's the problem.
It's tough.
Yeah, it is.
Yeah. So to go back to the way beginning, you graduated from Rutgers. I'm curious because I never was actually a part of a fraternity before. I want to know.
Oh boy, we got to this stage.
You were at Chi Phi. You said. I want to know, what is it like Greek life? Because Mike was talking about how he was potentially going to join.
I walked away.
What was it like at Rutgers?
It was Rutgers was just a huge party school. I mean, it was the best time of my life. You know, I lived in the fraternity house. I lived in a house off campus for a year, and then we lived in a fraternity house. Listen, every day was a party, but you had to balance, right? You had to balance. Even back when I was in school, you have so much free time in college, right? I was still working 3 jobs in school. I still managed to go out almost every night of the week somehow, and I still managed to get through with high honors, right? So it's all about just managing your time. But Rutgers was just fantastic. I still do business, as I was mentioning to you. You know, I met Chris, through my fraternity. We were fraternity brothers. There's so many guys in my house that I still speak to, that I became very good friends with. And it was a lot of fun, but I also, 20 years later, 25 years later, still have business relationships with these people. And it goes back to what we said before about, the networking, right? How I built my business, and that to me was the most important thing of being actually part of the frat.
2-part question.
I was going to say, before you go to your 2-part question, you know what that answer was? That's the dad answer. That's
I'll tell you the answer offline. The other answer offline.
My kids could be listening to this podcast. I want them to know that they should work 3 jobs. They should go to school. They should get high honors. That's what he's trying. That's the dad answer.
Yeah. I like it. Yeah. So part 1 is, what were the 3 jobs while you're in college?
Yep. So I worked for an after-school care program. I worked in a kitchen. I was a cook, and I was a bartender.
Okay.
Yeah.
And then how did you, time management, I think is something that everybody can work on. How did you, and aside from just using the easy low-hanging fruit answer of discipline, how did you manage it? Because most people can't do that.
The thing you had to always do is show up, right? And I say the same thing to my guys. I don't care how hungover I was, what time I got in, whatever happened the night before, I would get to class. I would make sure that, and I think part of it had to do with, I also was the guy that was paying for my own college, right? I went there, I took out loans, I did it, so I think it's different when it's on your shoulders, but I always showed up. And I say the same thing to my guys, why are you not doing well? Because you're not showing up. You're sitting home. Too many people, I think, got comfortable during COVID. They now love to work from home. Their personal life now revolves around their work life. They're trying to figure out how to not go into the office, not get out there. I think that's wrong. I think that's the wrong way of doing it. So showing up was always key, and that's how I got through.
Well, you actually, I got to correct you. You said that your personal life revolved around your work life. It's actually the reverse now. Your work life has to now fit around your personal life. Which is crazy.
You know my feelings about that.
I know. And
That's what
I don't believe in it.
And if it doesn't fit into your personal life, then you need to then try something else.
Yeah.
But that's just the world.
There's no separation. I don't believe in the separation of work and life. It doesn't work. Yeah.
It's a tough balance. But you have to be able to, because I have 3 kids, right? I have to balance. My boys are all in sports, and I want to make sure that I'm always there for them. But at the same time, I can't sacrifice my job either. I have to be able to provide for them, right? So it's a tough balance.
How do you balance out the exercise element? Because I know that you're a big fitness guy. You like to exercise. How do you fit that all in? Is it because you love it? Like some people hate working out, but they just know they have to do it.
So it's like an addiction. Like some people have bad addictions, right? To me, it's an addiction. But it's a good addiction to have. And to me, if I don't work out and if I don't get up and do it in the morning, my day's going to be all thrown off. To me, it gives me my energy. I'm able to think straight. So, but yeah, I mean, once you get on a routine, you get on a habit, and it just keeps me going. That's it.
It's huge for the mental state.
Oh, it's huge.
And then my last question I want to do before we wrap up is a fun fact that most people don't know about John Palumbo is that he's a hard metal. Is it heavy metal? Heavy metal fan?
Yeah.
Loves heavy metal.
I wasn't sure what you were gonna say. I was like, I don't have no idea where we're going with this.
I'll tell you a really funny story.
That wasn't in my notes.
Yeah.
I'll tell you a really funny one. So I'm a huge Ozzy fan. Ozzy's my idol. I've met him once. I was able to meet him. And one day it was in Rutgers when I was in school, and he was doing a book signing. And I was like, I have to meet him. And you have to buy tickets in advance. And I didn't have any money. I was broke. I didn't buy the tickets in time. I couldn't get one. I was begging people. I went there, and I'm sitting outside, and he rolls up in this huge limo, and I'm trying to buy tickets from all these people, and no one would sell them to me. So I'm stuck outside. So he comes out of this limo, and he goes like this, and he spits out this huge wad of gum, And he's like, oh, he starts saying a few things. He just mumbles everything, Ozzy, right? So, everyone goes inside. He goes inside. He's doing his book signing. And I'm looking at the gum on the ground.
Oh, God.
Yeah. I'm like, to the bouncer, I go, come on, man. I'm like, get me the gum. Get me the gum. And he's like, are you serious? I said, yeah, get me the gum. So he got me Ozzy's gum. So for years, I had Ozzy's gum in a Ziploc bag. I had a strand of his hair in it. Okay. And I was like, this is the coolest thing ever. Who do you know that has Ozzy's gum? No one, right? I have Ozzy's gum. Okay.
All right.
So
is this at the Totowa?
I'm trying to put my head around this one.
Is this at the Totowa house or is this at the Brielle house?
Is this on a mantle? Like, is it bronze?
No. Many years later, my mom cleaned out my closet and threw it out. I was so heartbroken, because I'm a huge metalhead. I'm still going to concerts. I still go into mosh pit once in a while.
So what's the resale value on a wad of Ozzy's gum?
Probably a lot. At one point, I thought about cloning him because I had a strand of his hair. I had his DNA.
That's pretty deep. Wow.
Yeah, so I'm huge into music. Yeah.
All right.
Yeah.
If anybody wanted to reach you, I mean, my family has used you. I have used you. You're incredible. If somebody wanted to reach out to you, how would they contact you?
Yeah, my phone. I've had the same cell number for my whole life. Since I was a kid. 973-699-3797. That's the cell. And then my work email, john.palumbo@movement.com.
Beautiful.
Yeah, and I'm very responsive. You can catch me nights, weekends. I always answer my phone as best as I can. So,
John, it has been an absolute pleasure.
Same here, guys. Thank you.
Absolutely.
Appreciate you guys having me.
This was great. I'm happy we finally got you on.
I know. We finally made it happen. Thanks, guys.
Yeah.
Appreciate it.
Thanks.
All right, everyone, be great. Thank you for listening to another episode of The Mike and Matt Show. We hope you enjoyed the episode. Please subscribe, follow, like, and comment on whatever podcast platform you listen to all of your favorite podcasts. If you have a guest that you would like to see on the show or have a topic that you would like to hear covered, please email us at podcast@alphafunding.com. Again, I'm your host, Matt Weber, and my partner, Michael Strasser. Be the best version of yourself and take action. Life is meant to be explored. Be great, friends.
Hear the cry.